In today's video, I will test this trading strategy that does not require the use of any indicators with the goal to find out how much profit we could really make with it after 100 trades. For my backtesting, I will set my initial account size at $1,000 with 2% risk per trade. The creator of this strategy mentioned that it works perfectly well on the price of gold on a 4-hour time frame. And for this strategy, we're only going to be using one tool, which is called the Fibonacci retracement. So let's first start with adjusting this tool. First of all, let's access its settings. And in the style section, let's check this option right here. Next step will be to remove the background. Now we need to remove all these levels on the right hand side. Also remove these two as well. And now we need to change these two levels. So first, let's change this 0.382 level to 0.33. And the next level is going to be set at 0.66. Okay, now we have all the levels we need and the strategy is complete. So let's get into the trading rules. Okay, so here are the rules for entering a long trade. First of all, select the Fibonacci retracement tool. The next step will be to draw a Fibonacci from the recent swing high to the recent swing low. Next, wait for the price action to cross and close above this 0.33 level. We see just like it happened right here. And only when we have these conditions met, we can place a buy order at the close of our trigger candlestick. Our stop loss will be set slightly below the 0 level. And our take profit target will be set at 0.66 level. Okay, here is another example for a long trade. First, let's pick the Fibonacci retracement tool. Second, let's draw the Fibonacci from the recent swing high to the recent swing low. If the price action does not cross the 33% level and it keeps moving in the same direction, you simply keep adjusting the recent swing low. Okay, so here we see the price action finally broke above this 33% level, so we can safely enter a long position. Exactly opposite is true for short positions. First, we need to select the Fibonacci retracement tool. Second, we need to draw the Fibonacci in a way so that the first point is the recent swing low and the second point is the recent swing high. The third step will be to wait for the price action to break below this 33% level. This means the candlestick has to cross and close below it. If the price action makes a new swing high, you adjust the Fibonacci accordingly. Okay, this is where we had the price action breaking below our level. Our stop loss will be set slightly above the 0 level. And the take profit target is going to be set at the 66% level. By the way, you have to remember that for short positions, the 0 is always above the 1. Okay, let me give you some more examples so you have a better understanding of how to trade with this strategy. So here we see the price action is making lower lows and lower highs. In this case, we're going to be looking for opportunities to go long. So let's first draw the Fibonacci retracement. And now we're simply going to be waiting for the price action to break above this level. Okay, we see the price action broke above this 33% level, so now we can enter a long position. And we see that our first trade turned out to be successful. We also see that the trend has changed and now we're going to be looking for sell opportunities. Okay, looks like we have a signal to go short because the price action broke below this 33% level. But unfortunately, this trade didn't turn out to be successful. The second short trade wasn't profitable either, and this is mainly because we go in against the trend. Okay, let's move on and find one more example. Alright, we see our fourth trade turned out to be successful. So we had 2 wins against 2 losses. You might be thinking we ended up at the break even. But if we take into account the fact that our profits were smaller than our losses, we can clearly see that we lost more than we made. So the main problems I see with this strategy is, first, we're going against the trend, which is almost always a bad idea. And second, our money management is not quite right. In the second part of this video, I'm going to be testing a different way of using the Fibonacci retracement tool, and I'm going to compare it to this strategy to see which one makes the most money. Okay, now let's backtest this strategy 100 times and see how well it performs in different market conditions. Alright, so the backtesting is finished and the results are not that bad actually. The win rate is 65% and we increased our account size by 31.92%. However, if we take a look at the equity curve, we see it's all over the place. We had massive drawdowns of around 20% or so. Also, the profit factor is only 1.42 and we had 10 consecutive wins against 4 consecutive losses. So overall, I would say the strategy is not bad, it's definitely making money, but if the risk-reward ratio was at least 1 to 1.5, this number right here would be way different. Alright, now let's get into the second method of using this strategy. Okay, so for the second strategy, you do not make any adjustments to the Fibonacci retracement tool. So here are the rules for entering a long trade. First of all, the price action has to be in an uptrend. Second, you draw the Fibonacci level from the recent swing low to the recent swing high. Third, the price action has to break below the 33% level. And the last step will be to wait for the price to break back up. This is our final confirmation for entering a long trade. Our stop loss will be set at the 66% level. And this time we're going to be targeting 1.5 times the risk. If the price action reaches the 0 level, we move our stop loss to the break even. Okay, so here we see the price action triggered our take profit target before we had a chance to move our stop loss to the break even. By the way, if the price action breaks below the 33 and the 66% level, we're simply gonna switch the Fibonacci and look for sell opportunities. Exactly opposite is true for short trades. First, the price action has to be moving downwards. Second, we draw the Fibonacci retracement from the recent swing high to the recent swing low. Third, we're waiting for the price action to break above this 33 level. And once we have the price crossed back below it, this is going to be our final confirmation to enter a short position. Our stop loss will be set at the 66% level. And just like with the long trades, we're going to be targeting 1.5 times the risk. And again, if the price action breaks above the 66 level, we're going to be looking for buy opportunities. Alright, let me give you a couple more examples. Okay, here we see we've got an opportunity to enter a long position. And we close this trade with a nice profit. Here we see we've got another opportunity to buy. And this trade also turned out to be successful. Okay, now you know the rules for the strategy, so let's actually do our second backtesting and see if the results are any better. Okay, the second backtesting is finished and here are the results. Right away we can see that the win rate has dropped from 65 to 61%, and this is due to the fact that we changed the risk-reward ratio. But if we take a look at the profit we made after 100 trades, we see that it's almost 6 times more than we made with the first strategy. The profit factor is also looking better, it's 2.35, and we had 6 consecutive wins against 3 consecutive losses. I'm sure if we set the risk-reward ratio for our first strategy at 1 to 1.5, the win rate would be much lower. and this is because in our first strategy we were trading against the trend. You can also try to improve the strategy even more by adding, for example, a moving average to the chart. This would help you identify the trend direction much better. Okay traders, I hope you enjoyed this video. Make sure you click the like button if you did. Also check out this playlist right here. This is literally the collection of the best indicators I have found so far. Okay, I'm off. Thanks for watching and see you in the next one.